underwriting is a skill. It's an art to learning how to input the numbers and how to evaluate these properties. If you would like to learn how to underwrite properties like this or properties like that, then come and join my coaching program. My contact information will be
All
below.
right, so it is 11 o'clock. Let's get started. I would like to take this time because today I'm thrilled to introduce Brad Hreha. Brad, did I pronounce your last name right?
Actually,
Hreha?
Rayha, like Rayha.
Oh, why did why-
Don't worry, I've had two people my entire life get it right, so you're all right.
so but please accept my apologies. But I'm thrilled to introduce today Mr. Brad. He's a seasoned real estate investor and entrepreneur with over 8 years of experience. Starting in wholesaling single family homes, Brad developed expertise in strategic marketing, off market property acquisitions, real estate contracts, and market evaluations. His entrepreneurial journey began with a successful window tinting business, equipping him with the essential skills in communication, time management, and problem solving. Currently, Brad collaborates with high net worth individuals, focusing on value add multifamily properties in North Carolina and South Carolina, enhancing property values and ensuring substantial returns. His notable investments include Pinnacle Lofts, Pinnacle Lofts and Apartments, and Main Street Residence in Wichita, Kansas. Brad's versatility and commitment to excellence make him a leader in investment strategies. And we are excited to have him here on the Commercial Multifamily Mastermind Underwriting Show. So, Brad, welcome to the show. Is there anything that I left out of the short read?
No, thank you. I appreciate you guys having me. It's an honor. No, I mean it's been a journey to get here, starting with the business, not really what I wanted to do. Always wanted to get into real estate. So that's been a quick synopsis of my journey to this point. And
Yeah.
happy to go into any more detail about how I got here and how I started, if that's what your audience wants to hear.
Yeah. Well. Since we brought it up, how did you come into the commercial multifamily space?
Sure. So after I had done a little wholesaling and actually walked away from that for a whole year, it just wasn't something I wanted to build a business around. Looking at other options, and I came across a friend's post on Facebook of a book called The Best Ever Apartment Syndication Book by Joe Fairless. Ordered the book immediately, like literally went from his post to Amazon, ordered it, read the book. Unless you're really going to get into this business, I don't recommend reading it. It is almost 500 pages, very in the weeds, but it's a phenomenal book to read if you are in the business. Read that book, started reading it again, and realized this is something I wanted to do because when I got into real estate, I wanted to always get into apartments. I used to sit there at a stoplight and look over and see this huge apartment complex and think, man, how do you get so rich you buy that thing? Never really understanding the nuts and bolts of how it works. So once I read the book, it was literally like that light bulb moment in a cartoon where I just realized I can just skip from wholesaling, go all the way to apartments. Everyone tells you take the steps and move up. So went out, started joining Facebook groups, and one of the guys that ran a Facebook group messaged me right after I joined. I thought, man, this is interesting. Nobody ever actually responds to you joining groups and asks you questions. Kind of told him where I was at, what I was looking to do. We kind of had some conversation back and forth. And a couple days go by, and I see on his Facebook group or Facebook page that he's doing a 30-day challenge, get into your first multifamily property. So reached out to him, said I wanted to get in. He actually already had 10 people, and that was all he was going to take. Had a phone call with him. He allowed me to be the 11th person in the challenge. We started off going through the process of getting into this business. I think I had submitted my first offer 11 days into it, which I really still didn't have an idea of what I was doing. I just knew that you got to take action on this kind of stuff, or else you just sit there spinning your wheels. So I think 3 or 4 days after that, COVID happened. And that was very interesting. Someone trying to learn the business, trying to figure out what's going on when the people who are in this business 20, 30, 40 years have no idea even how to handle the situation. So we went 30 days. I reached out to him after the 30 days was up, and I realized the kind of mentorship that I got. I offered to pay him for more coaching, and he kind of blew me off, thought that was very odd. But 2 weeks later, he reached back out. He did another 30-day challenge because of COVID and went through it again. And I was just the one who just kept coming to the group every day, bringing deals, talking to brokers, talking to people with money, and just continue to get property brought to our Zoom calls, underwrite it, talk to brokers, what have you. Ended up becoming partners on our 2 deals. So from that point to this point, I've helped syndicate 2 deals totaling 158 units, and both of those properties are out in Wichita, Kansas.
Wow, that is fantastic. And you say you asked him to coach you, and he just poo-pooed it, huh?
Yeah, it was like, yeah, leave me alone for a couple weeks.
Wow, that's amazing. So, so Brad, what would you say are the fundamental principles of underwriting and commercial multifamily?
Sure. So, there's a lot of different ways that you can underwrite a deal. Everybody has their own unique style. I have something I call my bulletproof underwriting guide. I have a whole template here of how to go about doing it. I'd be happy to give it to you so you can share it with your network.
Right.
Um, but you really have to understand your market first and foremost. Understand what you can and cannot do to the property. Make sure you have a great property management team in place so that they can review your underwriting, tell you if your business plan is actually achievable or not, because at the end of the day, they have to go ahead and execute on your business plan. So having a great property management company, not just a property management company, is great to have. But as far as there's a lot of things people say in the industry. I mean, how many of you have heard right now that the pro forma is garbage?
Yeah, well, yeah, I think we all just about heard that.
Okay,
Not to go by it, not to
right.
believe in it.
Most
Yeah,
of that is true. However, in terms of time, I want to maximize my time. If I can spend 30 minutes on something and figure out how to do it in 15, I'm going to do it in 15. And then if I can figure out how to do it in 7.5, I'm going to do it in 7.5. So there's actually some great information that you can pull from the pro forma just
right,
to speed up your underwriting. What are they saying that the rents will be? Use it for right now, because you're going to have to go back and actually see if that's right later on. But for simple, quick underwriting, trying to get to a number so you can have that phone call with a broker,
right.
use what their projected rent is, use what the taxes are, use what the insurance is. Little things like that will just help you, get through your initial underwriting, your pencil, so that you can have a conversation with the broker. Beyond that, if the deal still works or you think it might work, okay, let's go back and confirm some of these numbers now. Let's call the county tax assessor's office. Or if you already have that information in terms of how they assess taxes and what the rate is going to be, go ahead and figure it out. But me, I want to look at an OM. I've looked at so many of them. I can literally scroll through an OM in about 2 to 3 minutes, get all the information that I need for my underwriting because I've done it so often. I've looked at so many, extract that data, throw it into my system, get an idea of where I'm coming at. So if the broker tells me, hey, we want 12 million and I'm at 8, I'm stopping, I'm calling the broker. I'm at 8 and I'm explaining why. If they're telling me, hey, listen, we're probably going to sell pretty close to that, I'm going to say, listen, I'm at 8. I'll send you an email with this that says I'm at 8 and explain why. And if offers start coming in there, let me know. I'll go back, reevaluate, and I'll submit an LOI. But that's it. I don't want to waste my time because we all know at this point in the game, you're looking at about 300 deals to get one right now.
Yeah, yeah, I totally agree with you. Totally agree with you. What do you when you're searching when you're in your market when you first got started, you picked your market. What was it that made you pick that North Carolina and that South Carolina market? What was it that made you pick?
So I knew New Jersey is terrible for landlords. I don't ever want to buy anything here. I will if I could steal it, right, legally. But it's not something that I want to buy around here locally. So I started doing what that book told me originally was analyze markets, look at population, look at the 5-year trends, look at the businesses there, what kind of industries are there, look at that kind of stuff. And I literally just went from New Jersey and I did um, Philadelphia, Pittsburgh, Baltimore. Like I literally started working my way down the coast. And the more markets you analyze, when you start seeing the positive trends of a market, I mean, it's like someone's like, stop, look at this market. Because when you start looking at one market, you're like, oh, this looks great. But I can look at a market now and go, man, that looks terrible. But then when you look at so many, you start to see, wow, look how great this one is compared to the 8, 9, 10 I've already analyzed. So I got
Gotcha.
down to North and South Carolina and I just saw everything that was going on there with healthcare and tech and all the people moving there that I just like, I've already analyzed about 10. I'm just going to stop right here. Plus, it's close to my home. I can drive there. It's only about an 8-hour drive. I don't have to get on a plane and fly there.
Yeah, but yeah, you did say you was looking at relocating to North Carolina. So yeah, that would be an ideal spot.
And
So
that came from doing all the market research.
yeah, and you know something, and that's just the reason why I'm looking at moving to Texas. After doing my research, now have a we have a property there and everything. It just really sort of makes sense to be closer to the property. And Jersey is not a friendly state to invest in. So, I put it like that, it's not a friendly state to invest in for my clientele. Maybe for someone else clientele, it may be, but not for my clientele.
Sure.
So, in today's changes in the market, the interest rates and stuff like that, how much of that is affecting your underwriting?
Yeah. So a great question. And people don't realize this. You need to protect yourself at every uh, part of the transaction, even when you're submitting an LOI. So I was looking at a 20 unit in Charlotte, North Carolina just last week. I had a conversation with the broker and I said, listen, interest rates are going up. We're looking at an agency loan, but we've already looked at properties similar in size that are just over $1 million in terms of the loan. The lenders start really tightening up on these types of deals. They
Mhm.
start getting more strict, analyzing everything a lot more. So when we're talking about a deal that's just right on that line between a bank loan and agency loan, I'm looking at both sides of this. So I can submit an offer and say, hey, we can offer 1.8. It's still probably $400,000 less than they're looking for. But here's the thing, in my LOI, I'm going to put in there a financing contingency that says if I can't get my agency loan and I got to go get bank debt at 9%, my offer is now, 1.1 or whatever it is. Listen, no seller wants to see that. I'm not even going to be in the running because there's going to be someone that doesn't put that in there. Maybe they could just stroke a check at this point because it's only about a $2 million property. There's still people out there that aren't going to syndicate that deal. So you always got to look at these things and have, an out for you or protection because you don't want to get into a situation where you say, hey, listen, I'm going to get a agency loan at 6.05, with 3 years IO interest only, and this thing's going to cash flow 7%. And then you go to close, you can't lock in until like, I don't know, I think 48 hours before you close right now. Um, and they say, oh, we're not going to do the deal. Now we got to go get bank debt at 9%. Now the property's breaking even.
Right.
Nobody wants to, investors don't want that. I don't want to deal with it. I don't want to manage a property for 5 years, not making any money.
Yeah, I could take that definitely for sure. Well, I'm going to shift a little bit because I want to just get into some basic fundamentals for those who may be watching this underwriting session for the first time, and we're discussing underwriting, what to look for. So I'm going to shift to some basic questions and so forth. But let me ask you this. How do you start your underwriting for your multifamily property? What data are you wanting to collect?
First, I want to know if it fits my buying criteria. So the most important thing in this business you need to do is set your buying criteria and stick to it. Now, if you're saying I'm only going to look at 30 to 60 units and somebody sends you a 25, it's close enough. Look at it. But you need to save your time in this business. It's the most valuable thing that you have. So set your buying criteria. I'm only going to buy properties between this year, this class, this location. I mean, you should know as soon as you get a property in your email, you should know in about 20 to 30 seconds whether you should even look at it, like in terms of open it up and look at the OM. If your buying criteria is not that strict, you're going to waste a ton of time chasing deals that just aren't good for you. So first and foremost, set your buying criteria. Second, as soon as I know that a deal fits my criteria, I'm pulling up the OM, I'm scrolling down to the information that I need to know, which is what's the current rent, what are the projections, how many units of each, what's the asking price, and stuff like that. I'm going to take that information, I'm going to throw that into my quick analyzer that just spits out an offer based on the NOI. I said the NOI and the expenses as well, to give me an idea of where that deal should be based on interest rates, your DSCR right now, so that I can go back to the broker and say, listen, you told me it was 3 million. I'm coming up with 800,000. Where's the disconnect?
Right.
Right. They may be pricing it on pro forma, which it's always hard for me not to laugh when I hear that, or they're basing it on comps, sales per door. We all know, anybody on this call understands that's not how this business works. So then it's a conversation of how I'm going to look at it and where I'm going to come up with an idea. Because again, I want to protect my time. I don't want to waste my time underwriting a deal that's 3 million when I'm already at 800,000. From there, let's just say they tell me 3 million and I come up with a number around 3 million. Okay, well, now I'm going to dive in, right? I'm going to go look at the rent roll, make sure that the vacancies are there that they say they are, make sure the rent is what it is, start looking at the numbers, make sure everything's correct. I'm going to take the average rent. I'm going to take the expenses out. I'm going to break it down. I'm going to put it in my underwriting model. And then from that point, I'm going to start going to my profit and loss, your T12, and I'm going to start working out to see what projected returns are. Now, you have to realize at every step of this, I'm going to go, this doesn't look good. This does look good. Like, I'm always evaluating whether I want to keep going or not. So if I throw it in there, and this is why I use the broker's pro forma, if I throw the initial numbers in there with the broker's pro forma,
yeah,
if the returns look like garbage, I'm done. I'm not looking at it anymore. I'm not going to try to make a deal work, right?
okay,
From there, once we get into profit and loss, I'm looking at what the long-term vacancy rate is for the area and to like 5 to 10 years. So like Charlotte, for example, right now is in a recession. They're probably at 12% vacancy right now, but average is 8. So my year one is going to be 12% what it is now, probably 12% year two, and then I'm going to go 8% year three. I'm going to assume in about 3 years we're going to be back to a normal market there. Now, again, that's still an assumption, but I always want to protect myself, my investors as much as I can. I don't want to get aggressive. Another thing I see with people a lot when they underwrite, they don't take time into consideration. They see these models, but it takes 3 months to move into a property to get your feet on the ground, to even have an understanding of what's going on before you can start making changes. So when I see people, they add all this extra income and increase rents in year one, it's not going to happen. We underwrite year one is the same returns as the T12 from the previous owner. We're going to assume that we're not making any adjustments in year one. Now, obviously, we're going to, and that's just good for us, but I'm not going to underwrite it there and inflate my numbers, because once you work it out 5 or 7 years, you're going to be way off where you're actually going to be.
right, right. Wow. So you mentioned a lot. You mentioned a lot, and I want to come back to some of that, because the one thing that I love about what you had mentioned was you look at the numbers. If it don't make sense, you're not going to waste your time. Boom. So looking at your metrics, what 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 critical metrics are you looking at to say drop this one, move on, just let it go? What are your critical metrics that you're looking at?
Mostly returns, but I mean, we all know the 1% rule, or if you don't, here it is. And actually, I didn't even know the 1% rule until after the fact that I was called that, but I just kept looking at the correlation between rent per unit and cost per door. So if I'm looking at a unit that's $150,000 and they're telling me I can renovate it and get $1,300 a month, that deal's not going to work. Doesn't make any sense. I can't get the returns that I'm looking for my investors on a syndication deal. I mean, someone who just wants to park money and put their money into it and let it cash flow a little bit, that's a great deal. But for where I'm looking, that doesn't make any sense. So that's the biggest thing that I see right off the bat. And when I go through the OM, I'm looking at what my price is, what the cost per door is, and where the rents could be. And if I know I can't get near that, I already
Yeah.
know just from underwriting it's not going to work.
Okay. 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 So, so you had mentioned about the year one. You said your year one is going to be the same as the T12. I definitely understand that, especially with today's market, right? Um, what are some, what have you seen some of the most common, I'm not even going to say common, but some of the most mistakes that that other investors or people that they say they're underwriters. What are some of the most big mistakes, man, that you've seen people make when they're doing their underwriting?
Newer investors don't understand what DCR is, DSCR is at 1.25 to get an agency
Yeah.
loan. I actually used to, when I was working with my partners, he was part of another multifamily training coaching group company. Actually, they would send us deals, and because I underwrite all the deals, I was always looking at them. Somebody sends me a deal, and they're like, "Oh, look, it's got 10% cash on cash." No, stop it. I'm having a hard time make something make 5% right now. You did something wrong. They don't ever adjust taxes. They don't ever get an insurance quote, or at least adjust them. Um, they always take the seller's word for what the expenses are without doing any due diligence on it. And they also, I'll look at the underwriting. The first thing I see, DSCR 0.63. Well, okay, that's great. But the problem is you're underwriting with long-term debt. That's now a bridge loan. Your interest rate is no longer 6%. It's probably 11% right now, or whatever it is at the time, right? So
Yeah.
they just change these couple little things and they go, oh, I got to offer $4 million less. Yeah. So it's not hard, right? Call the county tax assessor's office, find out how they assess taxes, when they assess taxes, what the rate is. It's a 5-minute phone call. Call another insurance company, or even call your property management company. Say, listen, I have a 1983 property that's B class in this area. What other properties around here have? What's the insurance rate per door? Like, it's not hard to get this information, but people just think I'm going to throw numbers into a spreadsheet and it's going to give me the answer. Listen, this is real estate investing, and so much of this is a gut instinct and based on feeling of doing it over and over and over and over again. You can't just put numbers into a spreadsheet and it tells you it's a great deal or not.
Yeah. You got that right. I totally agree there. I totally agree. What are some of the platforms that you use to pull your metrics?
So I like to I like to do everything on my own before I even go to my property management. It's
Uh,
not I don't trust them. It's the fact that I want to do it for my knowledge first. So I like apartments.com. So once I have a property and I know where it is, I'm going to start looking at the surrounding properties, and I'm going to start looking at what the unit size is, how many bedrooms, class of unit, what the amenities are, what the location is, and I'm going to start getting my own comps for my own property. And then once I have them based off the information on the website, I'm now going to call them. And you can do this two ways, and both of them work. You can call and tell them you're in the military or something, that you're going to be moving there and you're looking for a 2-bedroom. Oh, great. 2 bedrooms, only 950. Well, what if I only want a 1 bedroom? Oh, great. 800. Well, you know what? My kids might be coming with me. What's a 3-bedroom cost, right? And then you can find out if they have any specials. Can I bring a dog? Like you start asking all these questions like a normal buyer.
Right. Right.
Or you can call them up and you say, hey, listen, my name's Brad with Hreha Investments. I'm looking to buy X, Y, and Z property right down the street. Can you help me out with some information? I haven't had anyone turn me away unless they just were too busy and had somebody in the office. So you could do it either way, but you have to call and actually find out because a lot of the websites are outdated or don't have good information. So they may be saying they're $950 a unit, but what you don't realize is they're giving away, $250 concession or free
Right.
application fee, or they're giving half a month free. So you got to actually call them and find out. And then once you're actually doing due diligence, you're at the property, you're going to go visit them and find out all the information again while you're there and actually get eyes on it as well.
Cool.
Sorry, my
When you
voice.
be looking, oh, that's okay. Yeah, 'cause I know. Listen, allergies out here are pretty bad. Believe me, it's been affecting a lot of us out here in Jersey. When you looking at the, again, I'm going back to basics, right? Because there may be a few investors that's looking at this and they don't know. Let's say we're looking at a market and somewhere it's called somewhere city, somewhere state, right? That's somewhere city, somewhere state. So you're looking at a market population, let's say is around maybe 10,000. You notice that well, first of all, you know there was a serious incline with population greater than 12%. It was the population is going off the charts, but it's a small town. And when you're looking at that town and you're looking and you say now there's a population that's growing astronomically, but the town is small, what are some of the questions that's going through your mind to ask to ask like what's going on here in somewhere city, somewhere state?
First, I want to know how close is somewhere city to a major city.
Hmm.
That's the biggest thing. If somewhere city's out in the middle of nowhere, that's a tough sell to an investor. Let me tell you that because they want the major MSAs or at least close to a major MSA. The second thing I want to know is how many units is it? If it's 20 units out in the middle of nowhere with 10,000 people, I'm doing that deal all day long because you only have to fill 20 units. If it's 200 units, that's a different story. You're probably going to have a ton of marketing to kind of get people into that building, and can it even be supportive there? I've looked at many properties where they were vacant out in the middle of nowhere and someone's trying to sell me on. I said, listen, there's a reason it's vacant.
Yeah. Hmm.
So,
Hmm.
it doesn't mean that it's not a bad investment, but instead of long-term market occupancy being 93%, maybe you're going to have to underwrite it at 80%, right? So you have to take into some consideration in terms of location on where it is, but something's going on there. And that's just a little bit more research of why so many people are moving there. And again, things happen. So, Wichita just last year just got a Top Golf. I mean, Raleigh, North Carolina didn't even have a Top Golf. So that's saying something when you start seeing
Really?
stuff like that, because these major companies that put these Whole Foods, Targets, anything like that. That's why we always want to see major brands around our property because that means people will continue to live right there. If they have
Hmm.
to travel very far to go to these places, they may up and one day just say, listen, this is too far. I want to go move closer to my job or where I go shopping or whatever. So these are things you have to take into consideration when you're looking at properties out in the middle of nowhere with small populations.
Now for your criteria, what would you say is, yo, that's just too far?
Anything beyond 45 minutes of the MSA outline.
Okay.
I mean, you
All
can
right.
go an hour. Again, it really just depends on what's going on around it. So if I'm
Yeah.
seeing Walmart's, Target, Home Depot's, that's a different story, right? But if you're just out in a little bit of this little small town with 10,000 people and they don't have major brands around it, it's a hard sell to an investor because they want to see these things, right? They want to see that there's major brands being put there because they've already done all that research and spent all the money to know, hey, we need to go put a store here.
You know, when we first when the team when our team first moved into Dayton, Texas, you know, I know a lot of people like first when I said Dayton, Texas, for some reason they thought it was Dayton, Ohio, right? But the town population was small. It was. The population was small. And they were like, yo, that is what they were like. First thing, where is Dayton, Texas? 37.4 miles from the center of Houston. I got good with saying that, right? Um, but from the location when I first saw Dayton, Texas, I was like, wow, that's a small town, small population. I ain't gonna tell no joke. I sort of had a little bit of questions myself, right? But when I got on that plane and flew to Houston and drove to Dayton, I said, yo, this is the place I want to be because there was so much that I saw. You know, I saw infrastructure going in. I saw, like you said, I saw name name companies there, not just one, not just two, but there were several. That was coming to this small town. The town was booming. Population was when I say I'm gonna say population growing. Traffic jams because the city was holy smoke. We got to get adjusted, you know, to this new influx of people, homes going up and everything. So I'm saying all of that. When you're looking at what would you tell a new investor? He's looking at a little small town. What advice would you give that new investor? In a case like he see the small town called Dayton, Texas. What would you tell him before he decides to just say no? I'm not going to go there.
I'm selling them on the market. So I'll
Gotcha.
give you two quick stories here. I went and we lost out, came in second on a 50 unit down in Little Rock, Arkansas. Never been to Little Rock before. We went into the broker called it a comp. I mean, we're looking at a 50 unit. They're saying a comp is a 500 unit. It's not the same thing. But anyway, we went to look at it just to see what was in the area. When I tell you we walked in the front door and it looked like we were in Las Vegas, I lost my mind. I couldn't believe that this was in the middle of Little Rock, Arkansas. Um, but the same thing happened when we went into Wichita. When I brought the deal to my partners, his first response is, "What the hell is in Wichita?" I have no idea what the deal works. So our property is right along the Arkansas River in Wichita on the east side, which is where you want to be in Wichita. On the opposite side of the river is a little small area of the town called Delano. There is a apartment complex there that would blow your mind. Himalayan sea salt sauna, infinity pools, golf simulators, bike repair, a dog park that puts your park down the street to shame. Um, Renting for like $2,500 a unit when we're only getting 900 across the street. Now, it doesn't compare. It's totally different property, but that's the type of stuff they're building in the area where our property is at. They just put in a new AA baseball field, again, half a mile on the other side of the river. That was, I can't even remember, 25, $50 million. They're putting in mixed use apartments and retail on the others. Like there's millions and millions and millions and millions of dollars being pumped into this city right where we're buying a property. That's what we're selling on that new investor or even an investor that doesn't know Wichita. Because we're telling them, look, KU, Kansas University is putting this here. They're redoing this for, the NCAA tournament. They're doing this. They put this. We're telling them all the things that's going on in that market. And if they don't want to go beyond that, I mean, that's on them. But yeah, we're selling them on the market, all the growth that's going on there.
Fantastic, fantastic. For all new investors that's watching this, I hope you're understanding what he is saying, right? Go to the market and see what's there. When you grab that data, sell that market. And another thing he said, if you didn't catch it early on, and for those who may have just tuning in, please watch this from the beginning because he even said early on, you need to know your market. Knowing your market is the most important thing. You should know that market better than anyone. And I say that all the time to my students. You should know that market like you know the back of your hand. You know. Now, Now,
And hold on,
Brad,
I don't mean to cut you off, but I wanted to
no,
just
go ahead,
add something to that. If
go ahead.
you're investing out of state and you pick a market, let's just say you live in Texas, you decide to invest in Idaho, you should be going to Idaho and touring your market, talking with brokers, looking at their properties, asking them questions, and learning as much as you can about your market. We put in an offer on a deal in Charlotte one time, and I go down there to take a look at it. I met with the broker. Come to find out, it's right across the street from a bar and strip club, and the riffraff at 2 a.m. wanders over into the property and starts wrecking havoc on dumpsters and doing all this stuff. It's a problem property because of its location. Had we not gone there, we would have never known that. The broker's not going to tell us. I
Yeah,
actually found out and knew it before we went there just for my property management company. But once you go and actually look at it and see the problems with your own eyes, you go, yeah, this is the deal we're going to pass on.
yeah. I, it's funny you mentioned that because there was a property in Houston, beautiful property. Um, get together on this property, they didn't put the package together right. And when I went there, Jim and I, we went there, looked at the property. I think I went first, and then Jim came. But I went, looked at the property, and I said, first of all, the numbers weren't right. And I'm like, okay, let me take a look at this here. I went to the property, drove the property, and I believe in driving a radius. I like to see what's at least I would drive at least try to go at least a mile to 2 miles out all the way around. But when I started driving, I can't say north, south, east, or west, but I was driving. The one thing I noticed was there was a big field. Oh, what was that?
That's me. Keep
Um,
going.
so so the one thing I noticed, whoever compiled the numbers, they didn't compile it right. This beautiful property gated a newer model. When you drove past it, there was this big wide field. And then as you continue to drive, you came into this big cemetery, big cemetery. So you drove through this big wide field, you drove past the big wide field, you drove past this big cemetery. And then on the other side of that cemetery, that's where the riffraff and the ruckus was. And one, I'm glad I drove the property, like what you said. I'm glad I went there to take a look at it because when I came back, I said, first of all, there's no way that I felt like they must have been pulling numbers from people that was dead, thinking they paying rent. And there was no way. So let me say this right quick. And when and also for those of you who were paying attention, Brad made an excellent statement. That's the reason why I'm mentioning this about the distance, and that the field and the graveyard, the cemetery. When you're looking at comps, you must take certain things into consideration. Now, Brad said something. I don't know if y'all caught it. He said he looked at the OM. The property itself was, I think, 50 units, but they had a 500 unit up there. Did I hear that correct, Brad?
Yep.
Brad, now explain to everybody or explain to the new investors why that 500 is not a good comp for the 50.
It's a completely different property. So if I break it down to like say a residential property, it's like comping a one bedroom studio house to a 6 or 7 bedroom mansion. Like that's what you're talking about. So it's different year that it's built. It has different amenities. It's in a different location. I'm not going to go try to get rent comps from a property that has a pool versus one that doesn't have a pool. I'm not going to look at one that's got a weight room and my property doesn't have a weight room. People are willing to subconsciously pay more for this stuff, even though they don't use it. So when you have a property, you have to look at similar properties in a certain area, same year, same size, amenities, features, everything. If a property's outdated and hasn't been updated in 20 years, I can't use a brand new property that's got all the bells and whistles. It's not the same thing. People are not willing to spend that, even if they're right next to each other. You have to look at similar and like properties in order to get your comps. And what most people don't want to hear is this takes work and it takes time. Like you have to go through
Yeah.
the process of learning how to do it in order to do it accurately. But that's why you have such a great relationship with your property management company, so that once you find it, and
Yeah.
this is why I've developed such good relationships with them, because I do all the work up front and then I go to them and say, review this. Instead of most investors, they go, what can I get for rent? What are my expenses? They ask the property management company to do all the work. Some property management companies will still do it for you, but they don't like investors that they have to spend hours doing this for, when I can just come today and come to them with a sheet and says, please look this over. They're on the phone with me going, you're good. Or I think you can get this, or maybe we can't do this. Like that's a quick conversation. That's what property managements want to do. They don't want to waste time doing all the work for you.
I love that, man. I love that. Let me just ask this. When you're looking at your comp area, do you what areas, what things will you not cross over? Is there any limitations or restrictions that you will not cross over?
Sure. And some of that will have to come from your property management company. So I looked at a property, is the coolest property. It's called the Peanut Factory in San Antonio, Texas. Awesome property, would have loved to own it, but the area that it was in, I mean, a block over was different, a block that way was completely different. It was just one of those unique situations where I could not figure out what the comp was based on what was going on in the area. But it's at the bottom of, San Antonio, and all the comps are like 2.5, 3 miles north. And my property management company's like, well, there's a property right next door about 100 yards away, and they're not getting anywhere near that. So the more you know about the property, crossing train tracks, crossing neighborhoods, stuff like that. Anytime you have a highway with a double yellow, or even a highway with an overpass, I mean, all this comes into factors that you need to look at. But
Right.
obviously, the closer you can get to that property within the neighborhood without going over all that, the better that they'll be. And again, once you have that information, just go to your property management company and they'll confirm for you.
Thank you. I do want to mention, um, for those that are listening, Brad mentioned something about the market expense. He said he takes it to the property manager and he just asks them just to check it. And I do the same exact thing. Now, the one thing, and Brad, tell me how you feel about this. The one thing that I've done, I built a very strong relationship with my property manager. And since I know my market and I'm sticking to the Houston area, the Houston market and the surrounding area, I pretty much, my rule of thumbs are going to be for my market. My rule apply to the North Carolina market, because I'm not in North Carolina, I'm in Texas, right? So, so I have built my rule of thumbs based off of the relationships that I've had with my property managers, my repair and maintenance, my payroll, my turnover costs, stuff like that. Um, would you talk about that a little bit, to say why you need to build that relationship with that property manager, especially when it comes to you, especially when it comes to that investor being in that particular market, and maybe they should not take what is in one market over to a whole different market.
So you just nailed the biggest problem most people have in this business. They don't target a market, and they look at every single deal that comes their way. So one day they're looking in Florida, the next day they're looking in Texas, then they're looking in Idaho. The numbers aren't the same. Every major brokerage at some point in the year will put out a report and tell you what all these expenses are based on the year of the property, the class of the property, the location of the property. And all you have to do is just take them, extract the data, write it down, so that when you're underwriting, you can go, oh, look, I have a 2005 build. It's A class in Wilmington, North Carolina. I already know based on their thing that my insurance is going to be $1,100 a month. I don't need to go call an insurance broker anymore. I already know what my tax rate is going to be. Like all these little things save you time. I can't express to you as how important your time is in this business because you can waste a lot of it. You have to understand your market and know what your cost is. So I have actually different sheets that tell me what my cost is in Raleigh, what my cost is in Greensboro, what my cost is in Charlotte, even though they're all in North Carolina. They're slightly different. It helps you save time. It helps you, um, fine tune your underwriting. And the one thing people don't realize is any number in an underwriting sheet that you're going to share with an investor, you better be able to support your number. Because I have had people go through that and ask me the dumbest questions I've ever heard on a page 16 pages in of why one number is this. They will do it to you. So it's easy to go, and here's what I do. Anytime I present underwriting to anybody, I have a Word document that I create and I explain everything. So I say, here's the underwriting, here's how I came up to it. If there's any questions beyond this, happy to have a conversation. But it stops all the back and forth over little simple things that is probably beyond the person looking at it anyway. But
Right.
it just helps you be able to communicate where you got the information from and the information to support it. Because
Gotcha.
investors don't question once they have the support of it. They do
Right.
question you for coming up with it though.
Gotcha. Yeah. I would like to take, I would like to share with everyone, and this is just a sample, Brad, of a T12, right? What I would like to share, and just some of the questions are just basically around the T12. It's not. This is not a live deal, everyone. This is just an educational moment where you're going to learn something about the T12. So I want to just take this minute, and I also want to share this T12 right here, right? And a few questions I'm just going to base on around this T12. So everyone, what you're looking at here is a T12. There's three things that you should receive from your broker. And if you're dealing with direct to seller, two things, right? One thing, rent roll. Now and if you're dealing directly with seller, rent roll T12. If you're dealing with a broker, rent roll T12 OM. Okay. All right. So Brad, I just want to just when again, this is just a sample. This is not an actual deal or anything like that. But when you're looking at something like this here T12, what are you looking for? What
I'm
is it
looking,
that you wanted to tell you?
first of all, I'm looking at the numbers just to extract them for my initial underwriting. Once I'm actually going to get to the point where I'm going to deep dive into this, I'm looking for all the anomalies in this spreadsheet right now. So the very first thing that popped out to me, April 2023, loss gain to old. Why did it go from March of 26,000 down to 8? First thing that pops out to me. That's a question I'm going to fire off to the broker in an email. I'm literally going to go through this thing with my highlighter and start highlighting every number that doesn't look right. And then I'm going to send the broker a list of questions and ask them every single thing because I need to know what is going on with the property. I need to understand the story because at the end of the
Right.
day, we're auditing a business here.
That's
I
right.
want to know why month to month things change. And when I see big round numbers like line 16, 500, 500, 1,000, 1,000, that stuff stands out to me because no numbers are ever round like that. Maybe there's a unique situation, but I still want to understand what's going on there. Too many people don't understand or feel like they need to just trust a broker and not question anything. The more you question and push back a broker, the more they understand you know what they're doing, and the more they're going to respect you for what you do. That's a
Yeah.
very powerful thing in this business because it's a relationship business. So I'm just looking for all the anomalies. And once I go through and find out everything that I have a question about, I'm now going to fire off an email to the broker and ask him every single question. Sometimes I'll send him 5 questions. Sometimes I'll send him 100. It really just depends on the deal and how bad the books are.
Gotcha. Gotcha. When you're doing your underwriting, you're looking at your other income. Are there anything that you may take out, you may reduce? And if so, how come?
I always take out late fees because we're going to
Okay.
assume that we're going to operate the property better than current property management. Doesn't mean we won't get some, but I'm going to take them out because more than likely they're not going to be as bad as they currently are, which is why we're buying the property at a value add. Then it would just depend on some of the other income. I mean, if you have one tenant that's paying month to month for the year and they're paying an extra $250, I'm pulling that out.
Yeah.
I mean, and that's just other income, right? As far as adding it, I don't add in pet fees. Even though our one property that we bought had 4 pets on the rent roll, and after I walked it, there was 47 pets on that property. That's a massive amount of extra income every month. But I didn't underwrite it, right? And then as far as other things in, say, the expenses, let's just say a storm came through and knocked over 6 trees and it cost them $12,000 to cut it all up and remove it. That's a one-time expense, an expense that I'm probably not going to have. I'm going
Right.
to pull that out of their expenses. Like, this is when you start getting granular. It's really want to submit the best offer that you can. You got to start looking at every little number and understand the story and what's going on, when things happen, why they happened, so that you can, put your best buyer's hat forward and know exactly what's going on that property even before you step foot there. And all these numbers, they just tell a story. You just have to be open to learning the story.
There it is. That was the key word I wanted to hear. They just telling a story. And so that was excellent right there. Um, we got 10 minutes left. Alicia, would you like to, you have some questions you want to ask Brad?
Yeah, thank you, Daryl.
Yeah.
Brad, you talked a lot about different properties and different assets, all the way from 20 unit to 500 to 50. What do you look at all of those size properties, and is that what you invest in, or do you just look at a certain size?
So when I originally started, my goal was to buy a 100-unit property as my first property. It didn't happen. It ended up being a Class A 70-unit property. So I traded the Class A for 30 less doors. And that was an ego thing, right? And then in the beginning, I was looking anywhere from 50 units to probably 200. The problem with anything over 100 units is you're starting to compete with institutional buyers. You have people who literally just want to park money and don't care what the return is. So that was an uphill battle I had to learn over time, which is why now I really look at anything from about 20 to 80 units. 20, you're still dealing with people who could stroke a check and just buy the thing right out from underneath you. But a little bit larger than that, they're still too small for a syndication. And then once you get up around 80, you're starting to get up to that point where people are starting to syndicate those deals. So it seems to be the sweet spot that I found that I can actually submit offers on and get pretty close without going, hey, there's a 180 unit property. I'm at 18 million. Somebody's offered 27.
Awesome. And do you only invest in commercial multifamily?
I mean, I still do wholesale, do fix and flips too, but I'm really looking to do more stuff on my own, which is why I'm actually more targeting 5 to about 20 units right now, looking for stuff I can bring in one JV partner for, or maybe have an opportunity at some seller finance or something like that. I haven't had a great experience with syndication, and that's just come from partners. Daryl, I've mentioned this to you in the past. People don't realize what they're getting into, and I didn't realize in the beginning either. Not that I wouldn't do one in the future, it's just it would have to be a perfect situation for me.
Okay. Awesome. What, because we all make mistakes, right? And we learn from them.
That's what I
And
learned.
when you initially started investing, what are some of the things that have happened that you've learned from and take into account as you continue to underwrite?
How much time you got?
What's your top two?
Oh
The
man.
top two most expensive. Maybe I'll ask that question.
I haven't really had anything that cost me money. It's
Okay.
just been more of I've done things that didn't work out, made me look stupid, made me look like an idiot. I've made offers on stuff I shouldn't have made offers on and had to back out. Stuff that would be more detrimental to your reputation. But in order to learn, you have to do these things. And most people are afraid to make that first offer, and they're afraid to submit an LOI and explain to a broker why it is where they're at. Listen, most of these brokers are more uneducated than you are who are trying to do this business. So, um, again, nothing that's really cost me money, but I've looked stupid multiple times. Can't tell you how many times, but it's part of learning. You got to go through it. You can't get to where you're trying to go if everything works out for you. You don't ever become the person you're supposed to be if that doesn't happen either.
Yeah,
Yeah.
I don't think you're stupid because I think making a bad decision and going through with a purchase that you've learned you can't afford is silly, right? That's
Although,
great, but
let me say this. I guess my biggest mistake are the partners that I've partnered with. Um, and I'll try not to throw anybody under the bus here, but you've had one on your show here. Um, he said he could do X, Y, and Z and bring a lot of money to the deal and couldn't. So my first deal I was ever awarded was a 57 unit Class A building in Greensboro, North Carolina, with 9 retail spaces. So it was mixed use for 11.5 million. This guy claims to have raised $2 billion for real estate in his life and couldn't come up with the $300,000 that we needed for our EMD. So after I did all the work to get the property, submitted LOI, did underwriting, toured the property, went back again to do due diligence, the seller pulled the deal from us because we wasted too much time going back and forth with the PSA because we were trying to buy time in order for him to get the money to be able to actually, sign the PSA. So I would say that's probably the biggest mistake that I've made.
so when you look to go under contract, are you already securing that MD now as opposed to previously?
Yeah, we have it lined up. That was very early on in the beginning where I wasn't focused on raising any money at all. I was just looking for deals. So I have probably 1.2 million lined up right now that I could make a phone call on, and as long as that deal fits what I've already told them, I'll have the money for it.
Awesome. That's wonderful. Okay, those are my questions, Daryl. Thank you. I think you have a question in the chat.
And Darryl, you're on mute.
What's that question in the chat? Let me see,
Um,
because I'm gonna tell you.
it's
I tell that
from Daniel Mungra.
Daniel. Hold on a minute.
Okay.
Would you use? It said,
It
would
says,
you use?
I heard a rumor.
Oh, I heard a rumor.
Yeah, scroll
Hold on
all
a
the way
minute.
back up.
All the way back up. Oh, I heard a rumor about why investors are holding back. I would like to discuss it with you sometimes before the show ends.
You're on
Oh,
mute, Brad. You muted yourself.
Brad, you're on mute.
Oh.
I don't know how I muted myself. Sorry. Daniel, I think I understand your question. There's a lot of investors who don't want to put their money to work right now because so many people in the space have done bad deals. Deals are getting foreclosed on. The returns aren't as great as they said they were, in the beginning. So a lot of investors have been burned in the last, 4 to 5 years on some of these deals. So it is a very tough sell right now when you're talking to investors trying to get them to invest into a deal. If that
Yeah.
answers your question, let me know. And if not, I'd be
Well,
happy.
the other thing I heard was that a lot of there's a rumor out there that in a couple of years that everything will be cash purchase. So investors are holding on to their money so they can take advantage of their cash purchase period that's coming up. That's the part I heard from another show just
Are
like
you
this
talking
one.
about actual buyers like myself or the investors who are passively investing?
The investors.
Oh, I mean, yeah. I mean, if you have access to family offices and institutional funds, sure, absolutely.
That answers my question.
All right, cool. Um, Brad, do you have any parting words? Anything that you could recommend to, say, new investors that can help them?
I mean, this is a relationship business from every aspect, from brokers to property management companies to, if I see a lot of people mention boots on the ground. Listen, it's great to have people that can go look at a property for you. The good property management companies will go look at it on your behalf, take pictures, tell you everything that's wrong with the property. So you don't necessarily have to have somebody in a market, excuse me, that can do that for you. Get very good at underwriting, regardless of whether you're going to raise capital or actually do underwriting. I'm always baffled by people who want to raise capital and don't know what the underwriting even says, because how are you going to take someone's $100,000 without even knowing if it's a good deal or not? You need to, what's the word? You need to check every number. You need to do your due diligence. The business is not hard once you have an understanding of what's going on, but you have to be consistent. If you're not consistent, it's just never going to happen for you. That's the best thing I could say is if you're not constantly underwriting deals and talking to brokers, and it's not hard to create deal flow. You can go on Crexy.com, you can go on LoopNet, type in your area, put in a property search, and there's going to be 20, 30, 50, 100 properties. Call every single broker, introduce yourself, let them know what you're looking for, and follow up. I mean, just respond to their emails, even if it doesn't fit your buy box. Just say, hey, appreciate you thinking of me, even though it's an automated email. Appreciate you thinking of me. This deal doesn't fit because of X, Y, and Z. Let me know when the next one comes about. Just talk to people. Most people don't do the work, and that's why they fall off. I see that with all these coaching programs. People try for a month, 2 months. It took me over 2 years to get my first deal. It's not get rich overnight. It's not going to happen for you next month. I mean, even if you find something now, it's going to take you 30 to 45 days to get it under contract and another 2 to 3 months to even close. So if you're going into this business without the long-term play of, hey, it's going to take me 18 to 24 months, I would say don't bother.
Gotcha. Cool. Brad, I want to thank you so much for coming to the Commercial Multifamily Mastermind Zone and sharing your knowledge with us here and helping the new investors that are coming up. So I really want to say thank you so much. Is there anything that you want us to know, like some things that you may have? You said like you have a spreadsheet that you may want to give away, or are you a coach? Are you a mentor? Like, do you do coaching? Do you do mentoring? What do you do any of that?
Yeah, so I'll give you the bulletproof underwriting guide, and anyone who wants it, you can send it out to them. I do coaching under the right circumstances for the right people. I'm happy to have that conversation. And the other thing I'll let you guys know, on Amazon, I wrote this specifically for people who are just starting out. It's called the Multifamily Investment Blueprint. I wrote the book. This is my exact journey on how I got started. Everything that I did is in here. It's a quick read. So if you're interested in just seeing like what the actual steps are, it's like $15 on Amazon. It's not much. And
Cool.
there's
Well,
no underwriting in it just because
mm,
there's so many nuances, but I didn't leave anything out. There's no, oh, wait, he didn't tell me this. I want to get on a call with them. I tried to put all the information that I used when I started in the book.
cool. So I'm going, everyone, I will get the link to the book, and when I will post it when this goes live on YouTube, which will be today. I will make sure that the link is there so you can get the book if you want to get the book and everything. But Brad, I want to thank you so much. If you want to put your contact information in the chat, Brad, please put your contact information in the chat. That way people can reach out to you. But I just want to say thank you so much for coming and being a part of our community here. And and everyone, just to let y'all know, we starting on our next episode, which is July, I do believe it's July 9th, we're gonna start streaming live. We're gonna be streaming live. So we want to take this to a whole nother level. And if you don't know, we're on YouTube. Please subscribe to our YouTube channel because there's so much information there. There's a lot of information. And also help me get to 1,000 likes and 1,000 subscriptions. Okay. So, but Brad, thank you so much. I'm going to be reaching out to you because we're both here in Jersey. Let's see if we could do something together. Maybe just put a little something together at the Top Golf that's over there in Mount Laurel. All
That
right.
was my best event, the one I did at Topgolf. No,
Yeah, I
Daryl,
enjoyed that too.
yeah, Daryl, thank you so much. I greatly appreciate it. I hope your viewers got some value out of this. I did put my email and that's my cell phone number in the chat. So if anybody wants to talk, listen, I'm happy to hop on the phone for 15 minutes for everybody on the call. And any questions you got, anything you want to talk about, I'd be happy to set that up for you guys.
Sounds good. Thank you very much, Brad. Thank you, everyone, for coming to the Commercial Multifamily Masterminds. We are a member of the GOB network of apartment investors, and I'll see everyone on July 9th. See y'all later, everyone. Thank you. Thank you.